All right, welcome back for another episode of Carnivore Trades. Today is Monday, July 3rd, 2023. If you're not done so already, please give it a thumbs up, like, comment, subscribe to the channel. Come find me on carnivoretrades.com for swing trading alerts and analysis. Anyways, let's do it today. Really quick. So it's a short day. I wasn't even going to do a video here, but figured, just do something quick here for you guys. So we had a gap down. I talked about this last Friday. We'd probably gap down and go sideways. Look at the hourly RSI, really overbought. That needs to cool off. Bollinger Bands, look at that hourly gap up, way outside of the band. So we need to cool off some of those indicators here. And I figured that would happen today. So we're just going to mostly float sideways. Tesla had a nice gap up, obviously, on delivery beats. QQQ coming in under pressure ever since that started to back off. Also, IGV is down quite a bit here. That's down almost 1%. So pretty big move for a half day. Oracle leading the charge to the downside. That was down almost 2%. So that, and obviously that is a big leading stock in the IGV, as is Microsoft, which is down 1%. So IGV coming under pressure here, and that is pulling down the Qs a little bit relative to the SPY. So anyways, what am I doing this video on? Well, I get a lot of questions here about what could cause a more meaningful sell in the market. Obviously, we've rallied up. We've had rising interest rates. We've had recession fears. We've had weakening data. We've had geopolitical problems. We've had potentially sticky inflation. We've had a dollar index that's been holding up well. What could cause a more meaningful sell? And I think I've told you guys about this many times, but if you guys are new, all you got to do is look at the 2-year yield. And if this gets above, I would say 5% to, this double top, which is 5.08, that's where you could see jitters come in the market. Why? Well, when did the market bottom? March 13th, right? We were set to roll over here, and the bear case was about to play out, right? March 13th. What happened? The regional banks, right? But we knew about the regional banks up here, right? So what happened? It's really simple. March 13th, where was the Fed funds rate? 4.5. What happened on March 13th? The 2-year yield broke below the Fed funds rate. Stocks went to the moon. It's pretty much that simple. So why is that important? Well, because that means the Fed is behind the curve. If they are below the Fed funds rate, if they're above it, like they are here, the market can rally even with rising interest rates, even with geopolitical problems. If this starts to creep up, which I've been telling you guys it's going to do, telling you guys it's going back to double top, and then eventually it's going to go higher. But if you break this area, especially before the next Fed meeting, which is in, I think, 2-3 weeks, if this breaks through that before then, that's where you could see jitters. That's why the Fed, for the first time in history that I can remember anyway, or know about, is, like, for instance, a lot of analysts were saying, look, the Fed is going to pivot now because they paused last meeting, and they've never paused and then raised afterwards. But every time they've paused and held, and then eventually pivoted. But this time they're going to pause and raise. Why? Because this is creeping up. If this gets above their Fed funds rate, they're behind the curve again. And, what happens when they're behind the curve? Look at all that, right? Look at all that selling that can happen when they're behind the curve. So there's problems here. So that's the thing that we're watching here. Again, markets are holding up. There's light volume. Obviously, it's a holiday today, so we're not looking for a sell-off. But this is right here. This is, if this pops up, especially sooner before the next Fed meeting, that's where you can start to see a little bit more jitters in here in the market. And the yields are holding up. We had economic data this morning. Take a look at the 2-year yield. Sell-off, right back up. So the yields are strong right now, and they're suggesting they want to go higher. Been saying that for a long time. Look at the 10-year. There's a 5-year. There's a 10-year. Nice weekly inside bar pattern. 30-year. Nice weekly inside bar pattern. So they're holding up well, and that is going to be what I think could be the shoe to drop that causes the market to start to panic a little bit here and start to come back down into earth. So something to watch for. Again, it's a holiday day. As far as the market today, flat line. Again, we talked about that. We probably have an inside day here, but that is something to keep on your radar. Again, I've been talking about that a lot lately, but for those of you guys who are new to the channel, something to keep there on watch. Anyways, we'll resume and get back to it on Wednesday. Hope everybody has a safe holiday weekend. You guys take care. Come find me on carnivoretrades.com. Talk to you all later.